I do have some questions. I'll put them to you. If you can answer them, that'll be great. I think one has to do with some of the exposures that you've increased, and our data seems to point at some of the stocks where you've increased exposure, such as SKS Micro, Titan. That's interesting because it's going through a change in law right now, which is changing some of its schemes. Reddington India, Exide, Asian Paints, and it does look like that you may have exited out of USL in the open offer. Could you talk us through any of that?
Okay. If you go through each of these companies that are there, you will find a single thread that they actually dominate their entire business, or they are number one in the category that they are in. They are mid-caps essentially because the category is small. Third, all of them address an unorganized market which is very fast consolidating itself. All of these companies that you mentioned before, mentioned out there, have been part. All these companies that you've mentioned are increasing their market shares into their respective industries. So I think that's essentially the
Do you feel the same about Titan? Sorry, the question I wanted to put to you about Titan was simply because I think it's having to rejig its goal schemes thanks to the New Companies Act, and that might have, sort of force or put some sort of short-term pressure on the company. So do you feel the same way about Titan as you did, let's say, 3 months ago or 4 months ago?
It's a business, to be very specific with this company, it's a business which is very fragmented, and as you evolve as an economy, I think you will consolidate the business at a faster level, and trust is all that sells in that business, or one of the big things that sell in this business is trust, and your national presence. So it is structural. You can fault me, or we can get faulted for the timing of this entire business. We may not make money for a year, but over a period of time, as we get into the when valuations get more comfortable, I think we will see how this entire environment actually expands.
Okay. A completely different business is SKS Micro, right? And that has been through some 2, 3, 4 very difficult years. Do you think it's turned the corner? You've hung with the stock or stayed with the stock for a long time now.
It's been one of our recent entrants, but again, I go back to the same. It might sound like a monologue, but he dominates his entire business. Business is expanding at close to about 50%, and it's an industry which is expanding at more than 50%. Logistics in this business play an extremely relevant, and his ability to manage it is proven, not right now, but it's been around for now over 5 years. So I think that's what we like about that entire business, and the ROAs are just about great.
What about USL, United Spirits? Are you out of that stock altogether in the open offer?
We held on to it for an extremely long period of time, and yes, we exited it about some time back.
Is that because you think that that open offer price is probably the best price you'll get in the near term, or did you have other concerns about the business?
I wouldn't want to comment on that.
Okay, fine. Okay, fair enough. One of the things we noticed in your equity opportunity fund, and Nimesh pointed this out to us as he was, putting some of the data together, no investments. This is the NFO that you did last year. No investments in banking or finance, in IT, or in oil and gas. In the fund that you launched last year. Can you talk us through why that is the case, or have we got some part of this wrong, and maybe you have invested in some of these sectors in the recent past?
It's a fairly diversified fund. That fund has got close to about 65 companies out there, and it's got bits and pieces of every single industry. Thematically, that product which we launched last year went in to address the small cap space.
Okay.
What we saw with the small cap part of the market was every single company was trading to close to about cash on book, or at valuations which are 2 years or 3 years payback. And all of these companies, needless to say, when they have cash on book and trading at a 2 or 3 year payback, they were debt free. How wrong can you go from there? That's essentially where we put in the Opportunities One product in March of 2013. So again, the format was very simple. You look for those 3 elements of valuation of a business which will be in continuity, And if you put it together, we got a portfolio which was 60 companies, and I can look back and say that virtually all those 60 companies did extremely well.
Okay, but still no oil and gas in that sector. No, I suppose if it's small cap, there is one. There is, I think, Ceylon Exploration, which has now been a company that many blue chip investors have been looking at very, very closely, a multi-bagger as they call. But otherwise, there is, have you stayed away specifically from financials or some of these sectors in the recent past as you've added on to your holdings, whether it's in the mid-cap fund or in last year's product, which is the small cap fund?
No, I don't think we approach the entire investing business from a at least in these products. If you're trying to build a portfolio around absolute return, we don't really look at building a portfolio from an industry-wise, from industry upwards. So we'll take a company, we like the company, we buy the company, we watch for it a year. If the numbers and the execution is panning up, we hike our stakes. If the execution does better, we become one of the largest shareholders. So it's a process of 2 or 3 years before we actually end up being the largest shareholder in that company.
You've got Chambal Fertilizers on that list. I was curious to know how you assess the prospects for the monsoon and therefore where you see a company like that or that sector moving in times to come.
I think that's extremely near-term point of view.
Okay,
but
6 months, 1 year.
The way I'd look at any agricultural play, given the monsoons going bad, you take 1 year's cash flow, you deduct it from its market cap, that should be your downside. So we can do the arithmetic on every company there.
All right, which we won't do on this interview, but that's a good enough cue. I don't know, I suppose since it's difficult to talk stock specific in short term, as we see the economic recovery pick up and close the gap between market expectations, Kenneth, where do you expect some of the big gains to come in? So the question I'm asking you is over the next 12 months or more even, how will you be repositioning some of your holdings to take advantage of the economy closing the gap with expectations?
I don't think we're going to do anything very differently.
Okay.
I think you can't merge a macro trade and a bottoms-up trade together. What we've done in the last 5 years or 7 years, and it's as an industry and different investors that you will feature henceforth, they will all talk about how a business model evolves even if the economy is not bad. So let's look at it in 2 formats. The economy didn't evolve in the last 5-7 years. You had companies in their categories becoming dominant in terms of the profit shares, in terms of the profit pools in that entire sector, and you made money in it, so you made absolute money in it. If the economy actually revives itself, so you'll have this entire burst of activity, and there will still be some companies that will dominate their entire industries. So if it's going to be a broad-based recovery of the economy, you will find companies in virtually every industry that does extremely well. Now the difference could be you would make 100% in some, you'll make 60% in the other, and someone else will make a different number. But as long as you're making a 60 to 100% return in these kind of companies, I don't think anyone's going to complain.
All right, Kenneth, we appreciate you joining us and talking us through both your investment strategy as well as some of the areas of investment that your funds have put money to. Thanks very much for joining us.